That's 100.
What's going on, y'all? What's going on, good people, man? Another episode of Monday Night Take is about to go down and happen here, and we're actually live here in LA for this episode. So, on tour right now, in the middle of a tour, 4-city tour, traveling around the country, adding as much value as possible to people to be able to help people eat in these financial markets on a day-to-day, week-to-week, and month-to-month basis. You guys know consistently I show up and show out. And I'm always here, provide that value and that intellect. So tonight we're going to be talking about everything earnings season, everything that's pretty much coming up, man. Make sure you guys are paying attention. You want to have your notes out because this is going to be about 45 to 60 minutes of me just being on a roll, about to drop this game and give you guys this knowledge. So it's earnings season. Earnings season is always my favorite time of the year, right? Earnings season gives you an opportunity to be able to digest and be able to see how the companies that you may have in your portfolio currently, how they're performing from a financial aspect, but also what is leadership's, ability to be able to, like deal with situations and problems. So I think it's super, super inherent, important that we talk about earnings season. I'm super excited, and I know you guys are too. So we're gonna pretty much hop right into things, man. We got Goldman Sachs pretty much tomorrow, right? Goldman Sachs. We saw J.P. Morgan earnings came out. And, JP Morgan, the initial reaction to the stock price on Friday, I have JPM here pulled up here on my other screen. JPM was down to almost about $5. And, JPM went ahead and reported earnings. Those earnings came out. And then they had their earnings call transcript came out a little bit after that. And one of the things that I would say that I'm always looking at from an earnings perspective when it comes to the banks is paying attention to interest income, right? Interest income has been, a huge thing, especially with interest rates increasing. They've been increasing, their interest income coming in through that door. So that's one part and piece that I'm taking a look, at JP Morgan. Also as well, when you take a look at JP Morgan, you're looking at an EPS of $3.57. And then you had revenue of about 35.6 billion. Also, they had their revenue was pretty much up $5.2 billion, which was 17% year over year. So you did see an increase in revenue that actually came through the door of JPM. The stock initially dropped, and like I said, it reversed and actually turned positive. I think it finished up on Friday about 2.5%. So taking a look here, you'll see a lot of times that it was $3.50 for JPM finishing to the upside. So let's really talk about this and break this down for you guys. This is pretty much my third time teaching today. Some of you guys may have tapped in with me earlier, so I know you guys are probably getting ready to hear a lot of some different information. We might have heard a little bit of this earlier. I gave kind of a little sneak preview, and I want to talk to you guys about my earnings strategy, right? So a lot of times when companies initially report earnings, you can sometimes see the stock go up or down. Now, depending on the severity, right? Depending on the severity of the report that comes out, you can also see sometimes some major upsets. And what do I say by that? You might see a stock that might be down 10% initially, and then it rallies and turns around, and then all of a sudden it's now it's now up 10%, right? So sometimes you could see a flip of the switch, right? You could see a true flip of the switch. So for me, I'm gonna be real with y'all for a second. My mindset going into this earnings season is I want to try to capitalize off of discounts, right? I want to be able to identify discounts because I believe that not only has the stock market fallen enough, but I think that there's certain stocks that are coming in back into certain valuations that investors are going to say, yo, I can no longer ignore this, right? I can no longer ignore this. So I'm telling you guys here right now, man, my strategy pretty much going into this earnings season is to definitely always listen to these earnings calls very heavy. But I want to be able to trade and make some money, right? I want to talk about my trading strategy. How do I go ahead and approach a lot of times these earnings, right? And so when it comes to earnings, I like to play the aftermath, right? I don't really like to play pre-earnings, right? And when I say pre-earnings, I don't like to go into the earnings report and then be buying calls or puts and things like that, playing the earnings report because the odds are not in your favor. I want to break that down because I know this is something that some people are doing. I see the DMs that are coming in. People are saying, "Hey, I'm looking to play this earnings and make this money and all that stuff." Like, it's very dangerous to just buy a call or buy a put on an earnings report. It's super, super high risk because you never really know what can happen. Sometimes, a company can miss and the stock price can still go up, or a company can beat and the stock price can still go down. Guidance is always very key. So my mindset is to play the aftermath. I like to wait until the dust settles. Like, that's one thing that I really like to do. I like to wait until the dust settles. And the reason why I like to wait until the dust settles is because it gives you an opportunity to be able to get option contracts at a discount, right? And I want to talk about something which is called IV crush. I want to break that down for you guys. So going into earnings reports, what really bids up prices of things? Supply and demand, right? So if there's a bunch of demand for options, right, and people are seeing that demand for those options, what ends up happening is that a lot of times people are looking to buy these calls and these puts beforehand, so it makes the prices more expensive. So if the prices are more expensive, if I was a seller of an option, I would love to sell an option pre-earnings, right? I wouldn't necessarily, you would want to say you would be on the buy side. You would probably be better off being on the sell side. I'm gonna break this down as to why, right? So what happens is that we know that options really move is from a price standpoint. That IV is really has everything to do with supply and demand. So, people are expecting an earnings season, the options market, you'll see on CNBC, right? You might be listening and say, well, the options market is implying a 5.5% move on this stock, right? And, essentially what that means is that stock really needs to move 5% up or 5% down in order for the options to actually really make money. A lot of times, more than not, earnings comes and a stock may only move 2 or 3%, and the options market gets disappointed. So what happens is that the next day, right, the next day or the next time that the market is open and that stock is now you're able to go ahead and buy calls and puts on that stock again, you see a lot of times the premiums really get eroded or devalued because they lose a bunch of value because of IV, which is also your Vega. So your implied volatility actually drops. And so your IV percentage may go from, 200% back down to 60, 40, or 50%, right? So for me, when I'm taking a look at that, I always tell people it's good to wait until the aftermath because I want to use an example on Friday, right? I had a couple students that hit me up and say, hey, I waited until after the earnings report and I hopped in JP Morgan calls. So for all those people that hopped in JP Morgan calls on Friday, around 9:45 a.m. EST and 10:30 a.m. EST, and they caught that reversal, they were able to get contracts at extreme discounts, right? They were able to get option contracts at extreme discounts. So they were probably paying 20, 30 cents on the dollar, maybe $100 most for a contract. And those contracts ended up running 3, 4, 500%. And even not a weekly option, but we're talking about contracts that are still 3 weeks to a month out. So this is the way that I like to wait. I like to wait for the aftermath. We have names like Netflix that will be reporting this week, Goldman Sachs, right? You can already take a look at Netflix's options chain right now, and you can pull it up. And Netflix options, are costing you right now about 2 racks, right? For in the money option, it's about $2,000, a little some a little bit more, right? So what does that mean? Netflix options usually aren't costing you, $2,000 for a regular, at the money or closely in the money option. So what happens is that like I said, the price, right, the demand goes up. People are expecting, right? People are expecting price to continue to move at a rapid rate, whether up or down. And so the options reflect that. And when the options reflect that, what happens is that now, people are expecting, well, this stock is going to make a huge move, and it doesn't make a huge move. What happens is that the option premium becomes disappointed per se, right? And so the IV crushed, it gets crushed. So I want to really tell people, man, going into earnings, man, leave the gambling mentality at home. I'm gonna tell you this right now. Like, this is not the market that you want to gamble in. I'm gonna be real with you guys. This is not the market that you want to gamble in at all. And you never want to. But I found it that a lot of times over the past year or two, but with me talking to different people, a lot of times people look at earnings to like kind of like play the lottery. And I'm gonna be real with you. This is no lottery, yo. This is no lottery. Some people are thinking that it's time to play around and you got time to play with this thing. No, this market will humble you. This market will humble you. So please take earnings season very serious, right? Take the week ahead and every single week this year, right? We got 50 weeks left in this year. And I'm telling you guys to take this stuff very seriously. So we go in here to earnings season. My first take on earnings season is this. I'm going to tell y'all this right now. My first take on earnings season is I don't think it's as bad as advertised. And I'm telling you this up front here now. I don't think companies will perform as bad as advertised. I think a lot of earnings misses are starting to become priced in. I want to talk about that, right? So for me, when these earnings are starting to become priced in, what does that mean, right? Some of these negative earnings, some of the negative things that you were hearing. Like, I want to throw out something for you guys. Apple's where it's at 134.76. When was the last time you heard about this subpar iPhone demand? Notice that was running. That was the headline that was running for like the last 2 months of 2022, right? Was the subpar iPhone demand. I ain't heard nothing about that. So guess what happens if Apple comes out and actually exceed expectation? The stock may actually run, right? And I want people to understand, like, the analysts, they play a dirty game when it comes to earnings. You'll see a lot of analysts increase price targets of certain stocks coming into the report, and it's really a setup to dump the stocks off, right? They'll increase the price targets to get the stocks to run up. So be very careful of that. This is your first note of the night. Be careful of a stock that's gotten 5 to 10 price target increase ahead of earnings. That's always a worrisome for me, because why is everyone super bullish ahead of this report? The same way sometimes that if I see a bunch of price target decreases and sell ratings, before earnings report, that can kind of cause a little bit of because I've seen a lot of times where, the companies getting the price target decreases, they'll be the companies that outperform during earnings season. Like, let's take a look back at last earnings season, right? Let's talk about which company in the tech space was actually the best performer. And that was Netflix. Now, who would have thought that going into last earnings season, that Netflix would actually come out, and when the dust was settled and it was all done, Netflix would have actually been the best performing stock during that earnings season for that tech space, for the FANG stocks. Netflix was able to defy the odds, right? So I want you guys to really think it wasn't Tesla, it wasn't Apple, it wasn't Microsoft, and it wasn't Google, and it wasn't Amazon, right? It was Netflix, right? It wasn't Meta Platforms. Meta Platforms got clapped. So pay attention here. A lot of times, Wall Street will set people up. And for me, I learned this, going through a bunch of earnings seasons. I've been through a way more earnings seasons than I can count now. And, every earnings season, I would say that I learned something different. I'm listening to a different earnings call, right? I'm finding new companies. I'm listening to some of the same companies' earnings call, but I'm still learning new things, right? I'm looking at what products are getting ready to come out. Where is the company from a leadership standpoint? I love hearing from our leaders, man. Right? I want to see what Elon has to say this time, right? He got some big shoes to fill. He has some people that he needs to quiet down, right? There's been a lot of talk at Tesla, a lot of talk with the Twitter stuff, right? All that stuff. Elon has an opportunity to step up to the plate right now, and he has an opportunity to deliver, right? So it's pretty much, go big or go home. Earnings season, you only get 4 earnings seasons in a year. So you got 4 opportunities to showcase your shareholders. Why should we be invested in your company, right? Why should we be invested in your company? So these are the questions that you want to ask, right? And the things that I'm looking for this earnings season, and everyone can take notes on this, these are the questions that I'm going to be asking myself, and then I'm going to be asking right? I'm going to be asking, I'm looking for the company's earnings call to answer in the report. What is the number one question that I have is, where's our pivot point? What ways are we pivoting right now? Do we even have a pivot plan? These are things that I want to hear and listen to, right? I want to see, is there opportunity for more growth from a spending standpoint? How are we managing and spending the capital that we have cash on hand right now? What does our balance sheet look like, right? Are we taking on much more debt in a higher interest rate environment? Or do we have cash in the bank to be able to divvy up and make moves with? There's reasons why people like Uncle Charles, like companies like Snowflake, they got cash in the bank, man. I don't want to be in a company that don't have cash in the bank and that got a lot of debt, because in this environment, you want to be investing in companies that have cash in the bank, right? Cash in the bank to be able to expand and do different things, right? So that's kind of my mindset that I'm looking at. Here this earnings season, I'm like, let's get it. Let's see what these companies are made of, because there's been a lot of companies, that have been fraudulent, right? A lot of companies that have been super, 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 super fraudulent. So I want to discuss, man. I want to discuss. So going into earnings season right now, we are on the cusp of a breakout right to the upside. So shout out to the T Triple Q. T Triple Q just cracked $20 on Friday. Shout out to Alibaba 117, right? Alibaba looks like it wants to head to about 123. AMD and Nvidia, right, sitting here at the 200-day moving averages, approaching them very closely. Nvidia already is smacking its head on it now, and AMD's on the way up to smack its head on it as well. So semiconductors look prime for a breakout. The tech space is looking a lot better. A lot of those growth names that were super oversold in 2022 have actually been setting up pretty beautifully here. The ARK ETF is off its lows of last year at $29 all the way back to 36, right? I would never probably trade options on an ARK ETF. That's just my preference. But if you're taking a look at someone who made like a lot of growth stocks, I'm gonna be real with you, right? People who like a lot of growth stocks, the ARK ETF can give you exposure to the growth stocks that you probably don't want to be invested in from an individual name standpoint. So that's, and I want to talk about that, right? Because a lot of these growth stocks are going to be reporting earnings over the next 2-3 weeks and next month overall. And these growth companies, I'll be real with you, they've came down 60, 70, 80, 90%. But from a risk to reward standpoint, now is really the time that they have the opportunity to pivot, because a lot of the growth companies have already done the layoffs, right? And they were first to kind of really do the layoffs. So now it's time to say, okay, well, you've done the layoffs, you've cut your expenses, but how are you able to entice your shareholders that you have things figured out, not just this year, but in the long term? Like, these are the questions that investors are going into these calls with. They go on with 3 buttons, right? The first button is buy, the second button is hold, and the last button is sell, right? So like, as a company, you want to be able to see them illustrate, how do you keep people's hands off that sell button while you're talking, right? How do you keep people's hands off that sell button? Because we saw, like, last time around, we saw Zscaler, we saw CrowdStrike, we saw these companies get pummeled when their earnings reports came out. Both of those companies fell 20, 30% after hours. There was a lot of companies that fell 20 or 30% after hours. This time around, I don't see that. I don't see certain companies falling 20, 30%. You will probably see a couple, but to the magnitude of what we saw last time, it just seemed like, boom, 20%, 20%, 10%, 15%, 30%. We just kept seeing companies fall, 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 fall. And that leads me to my point, is where a lot of these companies, they were guiding lower heading into the fourth quarter of 2022. So we're getting fourth quarter 2022 results pretty much here right now. And 2022 is over. So guidance for FY, which is full year, you'll see a lot of guidance for FY, which means full year 23. You'll see FY 23. They're giving guidance for, the entire year here in 2023. And I think that the media has really portrayed that things are so bad and things are sluggish, and things won't recover, et cetera, et cetera. And I think it's really put people in a shape, man, of people thinking that everything is over. I'm gonna be real with you. None of this stuff is over, man. These companies that are sitting right here, right now, in the growth space, that are falling 60, 70, 80%. We'll say this, not all of them is going to come back, but there will be a few in certain sectors, cybersecurity, cloud computing. Think about it. Has cybersecurity slowed down? Has cloud computing slowed? None of that stuff is slowed down. Is the chip makers done for? Like, are people just not ever using chips anymore? No. So you got to really ask yourself the question of, am I investing for a short time or investing for a long time? Right? Because a lot of people are thinking that short-term investing, right, is I'm just going to get into the stock, I'm going to make XYZ. I'm going to be real with you. When it comes to investing long term, man, you have to be patient and you have to be diligent. The times right now, I'm gonna be real with you. You should be locked into these earnings calls left and right, because this is where winners are made. Winners are not made in bull markets, man. Winners are made in bear markets. Winners are made in bear markets. So right now, winners are being made, right? Notice that Ethereum and Bitcoin is back trending up higher. Bitcoin went all the way back to 21,000. Ethereum went all the way back to 1,600. Doesn't mean that these things can't go lower, but I remember the sentiment, and when Bitcoin was at 15,000, people saying, well, it's going to go to zero, and Ethereum's going to go to zero, and the crypto's dead and it's done. Nah, man, none of this stuff is going anywhere. It's not going anywhere. Just like these growth companies, right? It's not their season. You have to understand that in a high interest rate environment, the cost of capital increases tremendously. So it puts pressure on the bottom line initially, right? So a lot of these companies, had to really make some cuts, right? They had to make some cuts to the staff. They had to really make some tight decisions because money is tight. And so sometimes you struggle to expand during a recession, whether people wanted to admit it or not. Look at the signs, man. Look at the signs and pay attention. Overall, you got a lot of people putting stuff on credit right now at a high rate. So I think that factors in even into Q4 earnings. Just like, I know some people are expecting a lot of misses. I don't expect a bunch of misses. I think there'll be a couple, but I think that a lot of the Q3 numbers that came out that kind of caused the drag downs, I don't think that'll be a repeat offender here. And I think that people are looking and saying, like, even for example, Tesla, like, okay, Tesla in August was $313 a share. Tesla right now is $122 a share. So there's stocks like a Tesla. There's a bunch of companies that are down, like I said, 50, 60, 70%. But now where they're currently at, people are looking and saying, hey, that's a fair price to pay. Meta Platform sitting here at 137, a low last year of $87.76. When you take a look at this thing, man, I'm going to be real. Once again, one of those companies now sitting here at 137, people are paying attention in our prime and looking and say, hey, what's our recovery story here? Has the moves that the company been making, the job cuts, does all of this stuff make sense? Like, the time is money, right? Time is definitely money. So that's kind of where I'm at with it, man. I'm gonna be real with you. That's kind of really where I'm at with it. And like I said, when it comes down to me paying attention, right? Me paying attention to the little details. I'm gonna be real with you. It's about paying attention to the little details here in earnings season. So I'm this earnings season, I'm taking a liberty upon myself to being on as many earnings calls as I always can be on. So that's number one, right? If you can't catch the earnings call live, it's okay. Go to the company website after and go ahead and take a look at the earnings transcript. Or sometimes they even provide the replays pretty much like that. And then if replays not directly on the company website in a timely manner, a lot of times you can go on YouTube and pretty much get playback recordings. So, technology is no excuse why you shouldn't be able to listen to an earnings call. I understand if you might not be able to listen to it live, you might be busy working, etc. But you should be able to go ahead and tap in and listen to these earnings calls after the fact. So, that's one thing that I say is like, I always learn something new from just listening to these earnings calls, man. And it's always exciting. It's always an exciting time for me to be on. I love earnings. I love being able to hear directly from leadership. Hearing directly from leadership, it makes me solidified in, okay, why did I make this investment? Where are our plans? Where are we going forward? But also being patient, because a lot of times what happens is that people are not patient enough. A lot of people are looking, I'm going to be real with you guys. A lot of people are looking for results from companies within 3-6 months. But let's be real with yourself.
you haven't even produced results for yourself in 3 to 6 months. So you're asking a company to produce your results so you can get a return on your investment in 3 to 6 months. That's 1,000% return. But when was the last time you did 1,000% return on yourself? Let's have a real question here. Some people is having expectations, right, that a company is going to produce these type of results, but you ain't even put those type of results in the past 3 to 6 months. So be real with yourself, right? Anything that is worth having, anything that is worth building, takes time to build. I'm gonna be real with you. It takes time to build. So these companies right now are focused on maximizing their incomes, right? And protecting their capital. I'm gonna give a shout out to Elon Musk on this one, man. I think Elon Musk exposed a lot of things in the tech space. The fact that Twitter is running efficiently as it is, with him have laying off the amount of staff that he laid off, I think that's truly a testament to the fact that you do not have to have as big of a staff as these companies have. So I think these companies are really going to be a lot smarter as far as how they're hiring, right? I think they're going to be super smarter in how they're hiring. I think a lot of companies realize, yo, we overhired. We had too many people. We had too many high salaries, right? We had the ladies on a couple of weeks ago and they talked about it. Yo, people used to brag, man, I got this high tech paying job and I'm not doing anything, right? There was a bunch of people on Twitter talking about, yeah, I'm in tech and I got this high paying tech job, but I barely work, I barely do this, I'm always on vacation, etc. So you think that these companies was going to let that happen for an extended period of time? Yeah, you can get away with that in COVID, but guess what, buddy? The world's open back up. We ain't allowing you to do that stuff no more, right? It's telling people, hey, bring your butt back into the office. We ain't doing that online working no more, man. We need to see you. Like, a lot of people took advantage of that. Some people really use that for good, right? There's some people that really be doing their work at home and do everything they're supposed to do. But some people, man, was BSing and not really doing what they were supposed to be doing. So it comes down to it now. From a company standpoint, the company has to really make tough calls and tough decisions. We take a look at our labor force, right? The U.S. economy added a little over 200,000 jobs in last month when we got that labor report, and the unemployment rate dropped to 3.5%. So the Fed is here this earnings season again, as always. February 1st, mark your calendars. The Federal Reserve is going to raise interest rates again. Will it be 25 basis points, 50 basis points? That'll be a conversation that we have probably in 2 weeks, right before the Fed gets ready to report. But these are the things that are on the back half that people are looking at from an earnings perspective and saying, yo, how are you guys dealing with not just inflation but also the cost of capital, the cost to do business increasing, right? So all of these are different questions that we have. So going into pretty much tomorrow, Goldman Sachs is reporting, right? Goldman Sachs is reporting right off the rip. So I want to discuss and talk about particularly what's my expectation and what's my strategy. So like I said, I like to play the aftermath of earnings. I don't like to play before, right? So I like to play the aftermath. So looking at Goldman Sachs here, Goldman Sachs is at about 374 here right now. When I take a look at Goldman Sachs, I definitely think there's upside. It was never able to really get back above 400. JP Morgan, we saw how it finished up 2.5% on Friday. In the event that, depending on whatever the numbers are, you may see an initial reaction move to the downside with Goldman Sachs. But when the market opens similar to JP Morgan, you may see that stock may rally up and turn positive for the day. So that's something that you want to watch out for, not just with JP Morgan, but with other stocks. Sometimes you can see these stocks, like I said, start off red and then turn green the same day. So this is like where earnings season brings volatility. And I know you guys have been paying attention to the market and seeing that the market is dry. It's like the Sahara Desert. It's just dry on volume. It's like no man's land. Like, it's quiet. It's super choppy. Like, where the traders at, right? And what brings me to say this is like, yo, like, understand that if you understand right now, like, everyone's quiet. And a lot of some of these companies are quiet because they're actually developing and they're in developer mode and they're building. And that's a good thing. Like, you shouldn't always want to hear this and that. You shouldn't always want your company in the news 24/7, right? Sometimes you just want your company to be low key, and that's okay. I want I want my companies that I'm investing in, I want them to be low key. I don't need everything on the front page. I don't need everything on the front page of the newspaper saying every move that we're making. I like when things happen low key, right? And I think that in this year and the next years, you're going to see that automation is king. 2023, 2024, 2025, AI, automation technology. I know Mark's been talking to you guys about that heavy, but AI, automation, these are the next industries that are going to change the world, right? The same way that the cell phone and the internet did over the past 20 years, they dominated the 2000 decade and 2010 decade. What's going to dominate, like when this decade is all said and done, what would this decade be known for? Those are the type of, that's how I think when it comes to my investment. I'm not investing for today. I don't care nothing about today, right? I'm looking at, okay, where do I believe the world is heading to overall? The world is very complex, right? But you can see change happening right now, right? Look at, I mean, like change is happening right in front of your face right now. And you're seeing that, like we see the emergence of something like a chat GPT that I know has caught a lot of people like, yo, this type of technology is crazy, open AI, right? And I know that people are seeing electric vehicles on the road, and self-driving cars and vehicles, like you see it a little bit right now, but it's not really common, right? But it's the same thing as this thing that I have in my hand right here, right? This iPhone, right? A lot of times what happens is that people do not want to be, I'm gonna tell you this right now. A lot of times, people do not want to invest in stuff when things are in the infancy stages. What happens is that when things are in the infancy stages, there's a lot of kinks and bugs that you got to work out, right? But the best time to invest is in the beginning. Is in the beginning. So this earning season gives you an idea to see, okay, the dust is now starting to settle. We already know, like, think about, I want people to understand the news is going to be starting to become priced in. Okay, we already know the economy's bad. We already know that these growth stocks cost of capital increase. We already know the growth stocks fell 60, 70, 80, 90%. But when's that story going to be over? Right? When's the story? When is that story going to get old? Oh, man, yeah, it's down 60, 70, 80%. It's not coming back. It's not coming back. Right? Tech is dead. Tech is dead. And I seen, I'm going to give a shout out to Dan Ives. I want to say this was about like maybe a month ago. And I seen him tweet something. I think it was like the last week of December. And he was like, yo, he was basically put in a tweet. He was like, Bears finally got the tech trade right after 13 years. And I said, yo, he's so right about that. Bears have finally gotten the tech is dead and the tech is they got it right after it, but it took them 13 years for tech to pretty much get slammed and smashed on. Took them 13 years. And to be completely honest, there's a bunch of tech stocks that still are way higher than where they were at 13 years ago. Like the percentages is not even, you can't even talk about them. It's ridiculous. So my point is that if it took Bears 13 years to be right for a short period of time and not even be completely 100% right, you got to really ask yourself this right now. Like, what else are you, what other discount are you really looking for? I want to have this conversation with people. How much more do you want the market to fall? How much more do you want some of your stocks that you've been looking to buy? How much more do you want them to fall? Right? Like, really ask yourself that question. Like, what is it going to take? Because some people is fishing for the bottom. Man, I'll just wait till after earnings season to get this. Right? And okay, you wait till after earnings season, but next thing you know, the stock is up 30% from where you could have bought it at. Now you kicking yourself, oh man, I should have done this. I knew I should have done that. I don't want to hear any shoulda, coulda, woulda, none of that stuff this time around, man. Opportunities are dead in front of your face. Dead in front of your face. These stocks like a Meta Platforms have gotten pummeled. Pummeled. ARK ETF gotten pummeled. Right? For those that didn't want for those that may have wanted the ARK ETF at 160, 150, 140, at $30, what you even thinking about for? Like, I want people to step back for a second and say, yo, for people that want a Tesla at 400, at 120 bucks, what you crying for? For people that want a Nvidia at 340 at 170 bucks, what you complaining for? These are the questions that I have, right? Why are you complaining about a discount? Your favorite item At Target right now goes on discount. You're gonna be flying up there to get in. A credit card gonna be wide open. Wallet gonna be wide open. Why do we have the reverse psychology when it comes to these stocks and investing? Why do we look at it any different? Why? Because and I always people always say, well, I don't know how to evaluate this and this and that. The thing I throw back at them is, well, you know how to evaluate the product. You could tell me that this product and this brand was better than this brand because of XYZ reason. But I asked you to compare a company to another company, and you say, oh, I can't do it. It doesn't make so we got to really go into our minds. I'm gonna be real with you. We got to really look into our minds and say, yo, are we just playing around? Are we lazy? Right? Are we being lazy and not really wanting to put in the hard work and just pay attention to the little details? Right? Because it's super, super important. All this stuff we're going to continue to consume and use. I heard last year, and Mark talked about this. I heard last year, Meta Platforms is dead. It's not coming back. It's not coming back. Last time I checked, people were saying Meta Platforms was dead on a Meta platform. And I'll leave that one there. How you going to say Meta Platforms is dead, but you on Facebook and you on Instagram? But it's dead. Okay. It's $136 right now. Yearly low last year was $87. If this thing goes anywhere near 160, 170, that's 100% return from the low. Pay attention. Pay attention, because your stocks right now, the way they're moving, some of these stocks are going up 100% from their lows in a bear market. Anybody check out Boeing stock recently? Last time I checked, a couple months ago, it was hitting 113. Last time I checked on Friday, it closed at 214. Pay attention. Alibaba, last time I checked, Alibaba hit a low last year. Let's take a look at Alibaba. I think Alibaba hit a low last year of $58. Last time I checked, Alibaba closed at 117. That's 100% return from the low. See someone threw Netflix in the chat. Netflix closed, the yearly low last year was $160. Last time I checked, it closed at 332 on Friday. Y'all see what I'm saying here? Why everyone talking about bear markets and stocks is dead and this and all that stuff. Hope you guys are paying attention that some stocks are running up 100% from their lows in a bear market. And the stock market ain't ran to no all-time high yet. Anybody noticing the trend here? This is why I say that this earnings season is super important, because since last earnings season, a lot of these stocks ended up hitting yearly lows and running right out of them. Right? Running right out of them. So really, 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 really pay attention. JP Morgan was another one. The yearly low was 102. It smacked 102 and it never been back. Goldman Sachs made a yearly low as well, around 260. Smacked 260 and it's never been back. It's been up out of there. So those are the little things that I'm telling you guys that, are super, super important, that you kind of watch and pay attention to this stuff. NVIDIA, right? Another name. NVIDIA hit 107, 108. Flew like a bat out of hell right out of there. So, my thing is that you want to especially be watching these PE ratios very, 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 very close, right? I know you guys seen Coinbase last week. Coinbase went on a run. And a lot of the crypto plays, Mar, Riot, MicroStrategy, as they always do. They always go on runs whenever Bitcoin and Ethereum move up. But my job is to be able to kind of like what I would say is to be on top of this stuff, right? You have to be paying attention to the bigger things that are happening. You can't get caught up in the little stuff, right? You can't get caught up in the noise, the smoke, right? There's a lot of smoke out here, and people saying, well, this is going to zero, this is going to zero. Actually be listening to these earnings calls and seeing the direction of where these companies are going, because these companies are in investor mode. The same way that you should be looking at your finances and you should be looking at your pockets right now and saying, yo, I want to go ahead and invest long term, and I want to portion my money properly. There is no all-in number. I want to dispel that myth tonight. Some people are waiting for an all-in number. There is no all-in number. There's no number where you're going to be absolutely perfect. There's not going to be a number where the stock I need to get the absolute bottom. You're trying to catch the absolute bottom. You're never going to catch anything at all. So I want to make that note there. I also would say that, like, I'm gonna be real with you guys, like the individual, stock picking and just being in a bunch of individual stocks and just investing in that stock and just being spread out, you're spreading yourself too thin, right? It's really always good to, in my opinion, to overall be in the index a lot more than the individual stocks, because being a stock picker is hard. I'm gonna be real with you, right? Being a stock picker is super, super, super hard. It's hard to really be. It's hard because being a stock picker is one thing can end up taking a company from right to left. So I would rather be, particularly right now, I would rather be loading up on index funds and even some of the 3 times levered index funds, right? So if I'm bullish on semiconductors long term, I would be looking at something like the SOXL, which is a bull 3 times levered ETF. If I'm bullish on the NASDAQ long term, which I believe everyone should be, like, it's really like not even a question. Like, think about it. Like, do you believe in the NASDAQ? Do you believe in the top 100 tech companies in the United States of America? I didn't ask you if you believed in Teladoc. I didn't ask if you believed in UPAV. I didn't ask if you believed in Salesforce. I didn't ask if you believed in Unity Software. I didn't ask if you even believed in Tesla. I asked, do you believe in the top 100 tech companies? That's all I asked. Your answer should be, yes, I believe in the top 100 tech companies. You should believe in the top 100 tech companies, right? Maybe you don't believe in that one individual name, but that's fine. So I find it that, people in 2020 and 2021, they had a lack of index fund investing. Everyone's like, nah, index funds, they move too slow. They're boring. It doesn't make sense. Let me just be all in on all these different stocks. And now they're down 60, 70, 80% on all those stocks. But had they went ahead and taken a look potentially at staying in cash a little bit more, or looking at just, investing in the index, they actually, wouldn't be down as much. So I think it's super important that, people hone in on investing in index funds. There's nothing wrong with it. I like things like the SMH, the XLY, the XLK, VOO, VTI. I like things like the index funds because it makes it simple, right? And if you want to invest in individual stocks, okay, cool, but don't have a portfolio that's just concentrated in just individual stocks. I want to make that very, very clear. So, as this earnings season comes, right, I'm looking to start selling puts. And I want to talk a little bit about my selling puts. A lot of you guys have been following me. I pretty much changed the game with covered calls last year. I pretty much put the entire culture onto covered calls, was showing you guys every single week how I was extracting money out the market from covered calls, how I was hedging some of my longer term investments that have been, going down by selling covered calls. And also, now I'm really going into now how I'm showing you how I'm selling puts to acquire shares. So there's a bunch of stocks that I particularly like and I'm comfortable to own at certain prices that they're at. So I'm selling puts on those companies, right? To be able to get paid. It's like a coupon, right? I look at like selling puts as like getting a coupon to buy something, right? If I know that, hey, this item is $1,000, but I have a coupon, that's $150. Well, I only paid $850. That's the same way. That's the same way that cash secure puts is. If I know that I want to buy a stock at $60, but I want to get paid to own it at $60, I'm gonna sell the 60 put, right? And for me, I really think that cash secure puts, not even, I won't even just say this year, but I just think going forward, as we you'll continue to probably see some discounts to certain areas of the market. But if you like it long term, like selling a cash secured put to say, hey, if I have to own 100 shares at $100, but I can get paid $1,000 to make, owning that 100 shares far less expensive than, you knock $1,000 off, then I'm gonna do that, right? And going back to that selling call piece, once you own those 100 shares, you can now sell a call against your position, every single week, 2 weeks, a month, whenever, right? And there's some benefit to that because I'm gonna be real with you guys, right? I'm gonna give you guys a couple names here right now that haven't done jack anything over the past few months. Square ain't done nothing. Square's at $71. Go take a look at Square the past 6 months and tell me what it did. You also go take a look at Shopify the past 6 months and tell me what Shopify did. Why don't you go take a look at both of those companies? Tell me, have they really been going up and have they really been going down? They haven't. So these are just two examples to show you. And there's other companies that have just been trading sideways. And if you had just been selling options over the past 6 months on those companies, you might have actually gotten your principal investment of whatever you put into that investment back if you've been selling your covered calls the right way, right? And selling covered calls is a great way for that passive income to come in because you know that your money is invested. Your money's going ahead and it's invested, in an individual company. And with your money being invested, you know that it's gonna pretty much for you, be a little bit of time, what I would say. And I would say it may be a little bit of time or a longer period of time. I'm gonna be real, I'm more so in a longer period of time. So I want to get paid while my cash is actually vested in this company. I want to be able to generate some cash flow. Just like if you go buy a real estate property right now, you're gonna put a down payment in, but you want to go ahead and get some sort of residual income from that property. So I think it's, super, super, super important, that, I highlight that for you guys because that's my mindset. Here in 2023, I'm not playing no games. I want you, and I don't want you guys to play no games either. I want you to get everything that you can out of this opportunity and squeeze it, right? If you're not listening to anything else here on Monday Night Take, understand this. How many times are you going to get the market to fall 35% in a year? I want you to ask yourself that question. How many times are you going to get a market to fall 35% in a year? I can answer that for you, not many. So some people are sitting back thinking that, oh man, it's kumbaya. I'm not going to make no moves. I'm telling you here right now, this is the time where you got to get hungry. This is the time where you got to get nitty gritty. I'm not playing no games. It's grind season, right? It's grind season right now. No talking, just action. Just deliver it. Show up every single day, show up every single week, put your bread up. That's the number one thing that I'm telling people right now. I get it. A lot of people want to be traders and trade options. I ain't here to really talk too much about, being this option, all that stuff. Now, get your portfolio right. Get your affairs in order. Clean yourself up. Clean up your debt. These are the stuff that people change your money habits. Because if you have bad money habits, if you're looking to come into the market and think that the market is going to fix your bad habits outside the market, I'm here to tell you you're very mistaken. If you have a lot of bad habits, understand that you want to fix those, and it's okay, right? We all got our vices and different things that we got to work on, but the first step, right, is acknowledgement, right? Acknowledgement, right? That's the first step is acknowledgement, right? If you guys look at my shirt here tonight, what does it say? Acknowledge me, right? So the first step that you got to do is acknowledge. The first step that you have to do is acknowledge the issues that you have financially, right? Some people, I brought the ladies on a couple weeks back and I said, yo, you might be in a wrong career path right now. And it's okay. But you got an opportunity to pivot. Some of you guys are going to work every single day and you're unhappy. You're mad about life. You're not happy in the situation that you're in. And we get it. Fix that. Let's fix that. A lot of times in life we put things on, and I'm gonna tell you guys, this is really where I made that decision when I was 17 years old. I was unhappy in life. I was unsatisfied. Let me tell you the point I was at when I first started getting into this and trading and investing. I was unhappy in life because I felt like a lot of times, there was wasted opportunities for myself. I wasn't able to play college football. I had an injury. I felt like there was a lot of things that was wasted. But one thing that I knew was I was dedicated and I was willing to put in the work. So for me, it's like, yo, be willing to put in the work. I won't let me not use that word humble. Someone's gonna get on me. But what I would say is be a little bit more reserved, right? Everyone, and specifically in the Black community, everyone wants to be the person that has the big chains, the big car, the big house, the big this, the big attractions, the big social media, the big that. Some people just need to do some self-reflection for a second and ask yourself, are you actually genuinely happy in the things you're doing right now? Ask yourself, are you actually fulfilling your spirit and your purpose? Right? You actually should be asking yourself that question because here right now is crunch time. 2023 is an opportunity year. I told you guys this before. 2022 would be the breakdown year, but 2023 and 2024 would be like the rebuild. You guys know I love this the analogies to sports. The period that we're in right now is like this. So 2020 and 2021, we just won a championship. 2022, we had to trade away some players. We had a bad season. We missed the playoffs, right? Everything pretty much went wrong. Our player retired in 2021, so we had to figure things out in 2022. Now here in 2023, we're in rebuild mode. That's what we're in. We are in rebuild. So when you're in a rebuild mode, you have to. So I get it when I hear a lot of people saying, yo, I blew my brokerage account, right? I get it. Like I've been there before, right? Where you feel like, man, I'm just one step away. I just got to keep going. I hear you guys wholeheartedly. My message to you is get up, put your bread up, get up. It might take you getting an extra job. Put your pride to the side. Put your pride to the side for a second, right? Leave the pride at home, right? Put your pride to the side, because what happens is that we become super prideful and say, well, I don't want to do this. I don't want to do that. And, for me, I'm always transparent and telling my story. I worked 45 days straight without an off day. I took all that capital and I put it and I invested it not just in the market, but I invested it in myself, because I said, you know what? If I can commit to this, I can commit to anything. So I tell people it's like, yo, what are you willing to sacrifice? For me, I was willing to sacrifice 45 days of my time. I was willing to go ahead and work extra. And I said, yo, I'm going all in on this thing, man. I'm not playing around. So sometimes you have to get really dirty, and you got to get dirty with it, man. You got to get your hands dirty. You got to put in the work. And it's not going to be pretty. It's not cute. It's not sexy. So, that's my mindset, is just like getting really nitty gritty with it. So going into this earnings season, number one, listen to as many earnings calls as possible. The week ahead here right now, you're going to start hearing more talk about the Federal Reserve and what they're going to do with interest rates, right? You got Netflix and Goldman Sachs, right? So if Netflix goes above 341, here's my take for the week on Netflix, right? Before we wrap up here. Netflix has an opportunity to go near 380, 390 this week. I'm going to tell y'all this right now. A potential chance to even kind of see 400. Netflix has a technical barrier of 341 that it must crack. It must crack 341. And let me go ahead and share my screen real quick. Share my screen. See if I can share my screen real quick to show you guys. All right, you guys should be able to see my screen. And we're about to go ahead. I'm going to show you guys here on this Netflix chart, what's getting ready to come next, and make sure you guys have Netflix pulled up. So, all right, here's what I'm talking about, right? For people that's like, okay, what is he talking about? Netflix right here at 341. There is a gap to fill up here to the upside from that March breakdown of last year. You guys remember this because, we actually caught this Netflix downtrend. For you guys, we actually caught Netflix all the way up here. We were short in Netflix, but it has a gap to fill to the upside. So please pay attention to Netflix this week. Netflix has a gap to fill to the upside here. So I definitely wanted to, go ahead and, show that. So yeah, I wanted to make sure that we went ahead and pretty much showed that for you guys here. Netflix. Make sure you guys have your chart, pulled up. Try to show it here. A little bit of technical difficulty. Sorry about that. So Netflix has a about a $60 gap above 340. So a $60 gap above 340. So pay attention to that this week. Obviously, subscriber numbers are always super, super, super important. When it comes to pretty much Netflix. So that's my take on that. Tesla will be next week, and the rest of the companies will be next week. We'll cover that on next Monday's show. But that's pretty much what I have for you guys here this week, man. So, put your pride aside, put your bread up. Pay attention to the TQQQ SOXL. Do not let this market bounce and start pushing back up, and you actually didn't have no money in this market. I'm gonna tell you guys this right now. Please do not miss out on this stuff, because I'm telling you guys here, I'm starting to see it, man. I'm starting to see it.
Certain stuff is not making the market fall as much anymore, right? It's not making the certain stuff is not the market is not able to fall as much anymore, right? Certain sectors have gotten super oversold, and people are looking to build their portfolios out. Pay attention to Nike, right? Nike's at 128. Last year hit a low, I think it was about $77. So I want you guys to like really, really, really watch this stuff. Tesla right here at 122. I want before we go. If I told you last year that you could buy Tesla at 122, there was a bunch of people that was saying, "Man, I would love to buy it. I would love to buy it. I would have money aside to buy it." Tesla's at 122 now, and everyone's like, "I don't want to do it. I don't want to do it. I don't want to do it." Notice how the tide changes. When stock prices are at all-time highs, everyone wants the discount. And everyone keeps saying, right? When stocks are at all-time highs, everyone keeps saying, "Oh man, when it comes down, I'm gonna buy it." It's came down to giving you the opportunity, and you still ain't bought it. So ask yourself this question this week and over the next month. What stocks did you say when the market was at all-time highs that you would buy? I want you to look at all those stocks that you said you would buy when the market was at all-time highs. I want you to do that. And I want you to come back next week with those names, right? And I want to talk about some of those names because I'm going to ask you guys next week. I want you to come back next Monday with the names that you said at all-time highs. If they came down 30, 40, 50, 60, 70%, you would buy them. The reason I'm talking about Tesla is because I know for a fact that there was people that was saying if it came down 30, 40, 60, 70%, that they would buy it, right? There was also other names on this list, right? Oh, if NVIDIA comes down, if AMD comes down, if Shopify comes down, if these names come down, I'm going to buy it. If the XLY comes down, if SMH comes down, TQQQ comes down, SOXL comes down, I'm going to buy it. So don't put something out there and not do it. Patience pays. This stock market may not hit all-time highs for a few years, maybe 2 years, maybe 3 years, maybe 5 years. Okay, cool, right? That means you have that much time to invest, that much time to build your position. Wealth is built in bear markets, never in a bull market. So understand that. The pieces, you have to have a starting piece. It's built right now. When the bull market comes back, that's when people sell. That's when people unload, right? So for everyone really thinking about, okay, well, why did the market drop as much as possible, as much as it did, right? The market dropped because people was making record high money. I seen a report today that said 2/3 of the new wealth was made by the 1%. 2/3 of the new wealth was made by the 1%. So what does that tell you? That tells you that the 1% was doing something different than the other 99%. The 1% was buying in the last bear market, was buying when there was blood in the street, was buying when it was just a regular day. They were making sacrifices. They were living below their means. They put in the work. So that's what that tells me. The 1% made majority of the new wealth. So that means they was putting the work in. So I'm going to put the work in. That's the mentality that you got to have. It's you versus you every single day. And the reason why it's you versus you is because it's you versus you and your old habits. We all got bad habits. We all got things that we got to get better at, right? Some of us may have to become more patient. Some of us may have to study a little bit more. Some of us may have other things that we need to work on. But it's about identifying those things up front. And that's what I think that for me, I'm always holding myself accountable, right? A lot of times, and sometimes you might beat yourself up a little bit more than what you should. For me, I would say that I'm always my toughest critic because I always want to put out a great work, great piece, and I always want to put out great energy. So for me, it's like, yo, understanding when you're not putting out your best work, be able to identify that yourself and say, hey, man, I'm playing around. Right. And I've had to get on myself a few times. So don't think I'm just talking, I'm talking really to myself right now. I just say, you know what, Lawrence, you playing around a little bit too much. Get a little bit more serious. Right. You got to take a little bit of things a little bit more serious. Do this a little bit more. Right. Pay attention to this detail. Right. Because everything is about paying attention to the little details. Right. And holding yourself accountable first. Stop looking for someone else to hold you accountable.
hold yourself accountable. So I'm holding everyone accountable here right now. Come back next week with the stocks that you said you were going to buy at all-time highs. Come back next week and we're going to discuss those. Stocks that I said that I would buy at an all-time high, if it dropped a certain percent, I said I would buy CrowdStrike, which I'm doing now. I said I would also buy Palo Alto Network, which I'm doing now. Also said I would buy Snowflake, which I've been doing and selling cover calls. Shout out to Uncle Charles, right? So those were things, and I'm also buying the T-Triple-Q and the SOXL heavy. These were plans that I already had in place, and I'm doing that. And you best believe that I'm buying as well Tesla. You best believe that as well too. Best believe that. So this has been another great episode of Monday Night Take. Shout out to the Reverend, the Dr. Martin Luther King on MLK Day. Without him, this YouTube live probably wouldn't be up. A 23-year-old black man trading the stock market for a living probably wouldn't be possible without MLK and what he did. So shout out to this brother on his day. Shout out here to the Come Up series. Very grateful to all of you guys that I've met in person. Look forward to a lot of things happening bigger in 2023. Shout out to all the people that's tapped into the tour. LA, we're here tomorrow again. And then Houston, we're coming. Dallas, we're coming. So shout out to all the people that's listening out there, man. So let's continue to do our thing, man. I'll see you guys next week, Monday night, 8 p.m. Eastern Standard, 5 p.m. PST. Man, I'm on the West Coast, so I see what it's like to do a show on the West Coast now. It's a little bit different. It's only 6 p.m. here. So exciting. Shout out to all my East Coast people, man. Be back home in a few. Shout out to Jessica Davis, Tiara. Shout out to the collective. Shout out to Cameron. Shout out to my wife, Kim. I know she's watching. Love you. And see you guys next week. Peace.
That's 100.